Oh, no. We're not done just yet. We got one more day left, one more big round of news coming tomorrow morning. Got Non-Farm Friday right around the corner. Well, Reaction Thursday is behind us, November the 4th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for tomorrow. No, not just any Friday, get Non-Farm Friday. Another big take coming our way tomorrow morning. Got some great trades setting up for tomorrow. All the charts are ready. The S&P's here, Nasdaq's here, oil is here. Oil is definitely here with us here today. Got a bunch of great trades setting up for tomorrow's Friday trading session. By the end of this video tonight, my favorite trades for tomorrow. I'll also make sure to give you some stuff to keep you out of trouble tomorrow, whether you're trading on your own or you're trading with us tomorrow morning in our trade room. Before we jump into the video tonight, though, as always, I want to make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas. I don't want you to miss, not tomorrow night's, but next week's round of video newsletters, so make sure you subscribe. A lot of this stuff is time sensitive. Hit that little bell icon so you always get notified whenever we publish something new. And if you guys have any questions for me, drop those questions in the comments section. I'd love to answer any questions that you might have, so don't be shy about asking questions. And if you guys enjoy this video as much as I enjoy making it, hit that like button. Give me a thumbs up here on this YouTube video. Really appreciate you guys tuning in every evening and spending some time with me tonight on this video. But speaking of the video, though, time is ticking. Friday is not going to trade itself. Let's make sure we get these things prepped up and ready for tomorrow. S&P, Nasdaq, oil, everything's ready to go here. Again, got a lot of really good trades we're setting up for tomorrow. Got some ranges on the E-mini, got some ranges on the Nasdaq. You know, anytime we talk about ranges, we're talking about breakouts, we're talking about failures and reversals, we're trading rotation, right, as we always say. And then, of course, over here on the oil, what on earth got into oil today? Well, we had that big move down earlier this week. I told you guys on Monday, Tuesday, save your bullets for Reaction Thursday, right? You saw what we got today. So oil, of course, was a very big move day today. Wild session on the oil. Got some really strong moves down, right? And anytime we see, there's really two big clues on oil. One is the size of the move, and two is the strength of the move. And we'll talk about kind of what that means and, you know, how that will kind of give us a tip off as far as where the best trades will probably be setting up if you're an oil trader like I am. So S&P, Nasdaq, oil, everything's all set to go. Got some ranges, got some trends. I'm excited to dig into all these trades we're watching for tomorrow. Speaking of tomorrow, though, let's make sure we all get on the same page, because tomorrow is definitely not your average Friday. Tomorrow's Non-Farm Friday. It's been a busy week, right? We had Fed, the FOMC day on Wednesday. Today, of course, was Reaction Thursday, the Thursday after the FOMC announcement. Tomorrow we got more stuff. We got more hits coming tomorrow. I'll get the employment number tomorrow at 8:30 Eastern time. Now, remember that ADP employment number we saw on Wednesday morning? It was a pretty high number. I think it was like 550 or 560,000 new jobs being projected to be added in the month of October. So we'll see if we get a blowout number on that, right, on that tomorrow. Keep in mind, though, overnight tonight, we saw a lot of big moves on the charts today, right? And with some big news tomorrow, I always try to kind of caution you guys, be careful. Don't force things overnight tonight. We oftentimes see a little bit of analysis paralysis. The markets tend to tread water in those 12 hours kind of leading up to one of the biggest news events of the month, right? The employment number. So if it's slow, if it's sluggish, I think a lot of this overnight tonight might be a little bit slow, a little sluggish. Hopefully I'm wrong. Hopefully I'm wrong if you're in Asia or if you're, in some of the parts of Europe, right? But usually that leading into that big news report is relatively quiet overnight because it's such a big news report coming out. Nobody wants to put their neck on the line ahead of that news report. So don't force it. it overnight. And then remember, tomorrow morning, I have no idea, A, what this news will be tomorrow, or B, more importantly, how the market will react to this news. We are definitely not going to try to trade the news, right? News is illiquid. It's dangerous. Your stops are not going to hold. If you're looking for an easy way to end your trading career early, go ahead and gamble on news events, not just the non-farm payroll number, but any news event. The real money, the professionals, are waiting for those 10 or 15 minutes after the news comes out to trade the reaction. And that's exactly what my goal will be tomorrow morning in our trade room at 8:30 Eastern time. Now, normally Fridays are, a little bit smaller window of trading opportunities because just the same reason why you and I want to get out of the office on a Friday afternoon. The markets oftentimes kind of calm down on a Friday afternoon, but we'll trade whatever the market gives us, right? But, don't force it if things aren't moving into lunch or in the afternoon session tomorrow. We're going to come in early tomorrow. We're going to find our trades early tomorrow. And if we get lucky and we get some good personality going into lunch and going into the afternoon, we can trade it, as it goes. But just kind of keep it in mind as we go into Friday. Again, might be a bit slow here overnight. Hopefully it's not for you guys in Asia. And again, tomorrow, 11 o'clock, 11:15, 11:30. If it slows down bad, just ease off the gas pedal and we'll come back and trade more on Monday. Just like today was Reaction Thursday, right? The Thursday, the day after FOMC. Next Monday is another Reaction Monday. So I'll say the same thing tonight that I said on Tuesday evening's newsletter, which was save your bullets, right? If we're slow tomorrow afternoon, Friday over lunch, Friday afternoon, if it's slow and sluggish, don't go forcing trades. You don't want to lose any capital. Save that money for next week. We got Monday, Tuesday, Wednesday. And remember, next week, guys, we have a time change this weekend, right? Clocks will fall back 1 hour. And we have Veterans Day on Thursday next week, which means next week puts a whole lot of emphasis on Monday, Tuesday, Wednesday. Should be a pretty busy week next week. So the moral of the story is get to it early tomorrow morning. Make that money early. And of course, again, get out of there early if it slows down, but don't push it too far into the afternoon if you're not getting good price action because you want to save your bullets for what is anticipated to be another busy week next week. Now, don't forget, tomorrow morning, we open the trade room up 8 o'clock Eastern time. We're going to have a front row seat for that employment number at 8:30. Remember, we're not trading the news. We are trading the reaction, right? So 8:40, 8:45, 9 o'clock, we're trading the reaction to that news. So don't forget to come out and join us every morning in the trade room. Back to our charts, though. S&P, NASDAQ, and, of course, the oil market. Everything ready to go here. Let's jump first, though, into the S&P. S&P, boy, all of these charts tonight are a little bit different, right? So you'll definitely have a lot to learn and potentially a lot to earn if you follow the analysis for tomorrow. What's the most important factor right now on this E-mini S&P? I think the most important factor, there are probably two important factors. One is the strength of this move going higher. We saw kind of that panic buy coming out of the opening bell this morning, right? Anytime we see a strong move in one direction, we expect at the very least a retest of that high and potentially another leg in the same direction. We call these open loops, right? Kind of unfinished business. And you'll notice they just completed that open loop right now. This would suggest that right now the buyers are going to be, it's going to go or no right now. It's really all about what the buyers do at this point. Will the buyers be able to continue going higher for possibly another leg higher, or will the buyers take profit and will the sellers get a nice little gift and potentially a full rotation with that pendulum swing, back down we go. Maybe even a slingshot breakout going lower. So the buyers really have to, they got to show us something here. All spotlights on the buyers right now because that strong run up, they retest the high. Do we keep on going or do we peel off, right? And the second component of this right now is this range. Anytime we see a range, anytime we see double tops, double bottoms, flattening moving averages, we know that ranges act like magnets. the best way to trade a range is to find areas of resistance up above, find levels of support down below, use the range as a magnet, sell high, buy low, avoid the middle, right? Pretty simple idea when it comes to ranges. We do have a number of breakout patterns we can look for range as well, but those are going to be the two main components here right now. So as you can see, the buyers, it's all about them right now. They have to show us that they can hold this, because if they don't, sellers are probably going to attack and try to run this thing back lower, right? So a lot of ways we can trade this thing right now. Let's talk about some of the ways that we can trade this. Now, this range below us means that we have to get some sort of breakout pattern to want to be buying as we go higher. I put this channel on here. Honestly, this channel's not really that important right now. I want to put it on there so you can see kind of where that channel might be. There definitely is a trend line coming across that low, so I definitely do want to leave that trend line on there, but I wouldn't worry too much about that channel. There are, as we go higher, if I want to be a buyer up here, there are 4 different types of breakout patterns, all right? Now, the NASDAQ has a range as well. So we'll do a couple here on the S&P. I'll do a couple breakout patterns on the NASDAQ. So to learn them all, make sure you watch the entire video here tonight. One of my favorite breakout patterns would be basically a breakout pullback, right? What you want to see is you want to see a strong enough move higher to get this moving average up above those highs, right? That's an easy way to qualify the strength of that breakout. If I can get that breakout going higher, get that moving average above the highs, I can now bring it back, come in off that prior swing high, right? Trap in those bears as the sellers try to short back down in. Remember, anytime we see a strong move in one direction, I know there's a bullseye right on that high, and I can basically use it's ultimately a breakout pullback pattern, right? It's like this: strong move up, deep pullback, rope in the sellers, right, and buy into stop losses, right? Hopefully, it'll do better than that result right there, right? Although you would take your 1-to-1 profit target, move that stop up to your point of entry, and then ends up being a T1 at point of entry. Bottom line, though, is a breakout pullback, strong move up. Again, get that moving average clearing above these highs, and that'll tell you get enough strength to qualify that breakout. I'm not a big fan of just simply buying the dip. I like to wait for it to pull back, get those bears a try, and then once they do, those stops are sitting right there, and we can trade right into those stop losses. Where would our targets be if we get that breakout pullback set up going higher? What you want to remember is the breakout leg is the measuring leg, right? So you take the size of that leg and you project that up, right? That creates the next objective as we go higher here. That's one of my favorite breakout patterns. Another one of my favorite breakout patterns is called a two-try breakout, right? Two-try breakout. This one's pretty cool too. Strong move up, shallow pullback, higher high in price. Very simple. Strong move up, shallow pullback, right? That's the buyers want that pullback. They don't get it, and that's why that trap works so well. We call these two-try breakouts or two-try traps. Strong move, shallow pullback, higher high, traps, baby. And again, the size of the breakout leg is the size of that measured leg, right? Think AB equals CD as we go higher. That'll be very, very important because we're at all-time highs right now. There's no prior highs to work with up here, so we do have to worry about measuring that breakout leg as we go higher. That's 2 out of the 4 breakout setups we'll talk about tonight. Those can also apply to the NASDAQ too. The NASDAQ, you can also apply those 2 on the NASDAQ. Now, how would I sell up here? How do we sell this market? Well, there are 2 questions I'm always asking all of our students in the trade room. How's my location and how is my momentum? If you ask those 2 questions, you'll usually find yourself the right answers. First of all, how's my location to get short? It is perfect. We're at resistance, above a trading range. Great spot to sell short. But how is my momentum? Yeah, it's pretty bullish, right? Bullish here. It's definitely not bearish, that's for sure. So because of that momentum, I have to respect this. Great spot for a short, But I got to be careful getting short here right now because in case you've been living under a rock the past couple days, this market loves to go higher right now. So I don't want to try to picking a top on this, right? So how do we sell when we're going against all of that momentum? What we have to do is try to get these buyers to commit and basically wait for those buyers to get stopped out and sell into their stop losses. What I'm going to do in this situation, because we have this rising support, is I'm going to combine what I call a failure pattern with a trap setup, right? We'll let them try once. We'll let them try twice. And this will be the way I want to sell off the high, right? This trap setup. Okay, basically the way it works is to absorb the momentum of the buyers. I want the buyers to try twice. To avoid the trend line coming up, I use what's called a trap setup, right? Now, I'll tell you guys, traps are my absolute favorite price action setup. If I could take traps the rest of my life, that would be how I would love to trade every single trade. Oftentimes, these will come off of like a hidden channel up there, right? But traps are awesome. Now, I'm going to be talking a lot about traps, a lot about failures in this video tonight. I'm not going to go over a lot of the smaller details of how we actually qualify the entries, find them on faster time frames. So what I'll do is I would encourage you, if you want to learn more about all the entry techniques, how we find them, qualify them, disqualify them, I cover all the entry techniques in a much more detailed quick start class. I'll put a link up there for you in the upper right hand corner. If you're like me and you're trying to earn income in these markets, that free quick start class link in the upper right hand corner, it'll give you an easy roadmap to follow every day to help you find the best trades, just like we do every day in our trade room. So make sure you grab that link that popped up there, grab that quick start class, so the next time I say trap in those buyers, again, because we're trying to absorb momentum and that trend line, you'll know kind of the time frames to use, you'll know the indicators to use for it, and you'll know how to qualify or disqualify to stay out of trouble. That is a great short off the high. Now remember, this could just be the appetizer of this move. We could easily see something like this where it starts to rotate back down now, and now ultimately it goes from being a range market to kind of like a trending environment, right? Now, here's the key. You want to trade the rotation. The amount of the move up is oftentimes the amount of the move down. Okay, so that becomes the bullseye on the other side. Okay, just keep that in mind, right? We call this the pendulum swing. All right, so I take out that run up, right? Simply copy and paste it down, right? Copy and paste it down. And that now is where, give or take, where we expect this market is going to want to go, right? Makes sense? So now we have a good idea of where it wants to go. We get this market to pop up. The buyers try once, the buyers try twice, and we start making a run going lower. I talked about traps before, right? One of my favorite entries as we're going lower, trying to take out that pendulum swing, one of my favorite entries is find a new channel off the low, always draw it backwards, mark up that prior swing, and grab that trap off the high. Now, the trap is usually just one of them. It's often a trap setup, a failure setup, into a pullback combination, as we call it. Again, you'll learn these entry techniques in the video course I mentioned. It's free, by the way, on the website, right? So trap, failure, pullback, right, as we go, taking out that low. Now, I don't want to get too far ahead of myself, but oftentimes when the market goes up and then comes crashing back down, you'll get that short off the high, and then it will keep on grinding, right? Grinding. If this thing just starts to pummel, again, tomorrow we get some big news tomorrow. Again, we're going to see what we get tomorrow. But if it starts to really tumble, right? We call these slingshot breakouts, where that momentum swings almost like a slingshot, just throws the market lower. When that happens, mark up, go really tight now, right? Off those lows, find a new channel. We're always finding new channels, and then you want that first test. Okay, oftentimes that first test is a trap. It could be a failure. It'll be whichever entry we get down there. So as you can see, this could, again, obviously we're very bullish right now, right? But this could get really good for the bears here if the buyers fail. Got that trap off the high, that first test off the new channel, and then watch it if it starts to grind. I'm telling you, this could be really, really good there, right? For those bears. Oil, just so you know, remember oil, if you go back and look at oil earlier this week, or go back and watch the earlier newsletters from this week, that's what oil did. And that's what led to that big collapse, right? That slingshot breakout. I think the title of the video earlier this week was that slingshot breakout, right? So definitely want to keep an eye on that for the sell side. So now we kind of know how we're going to buy it. Now we know how we'll sell it. I think the one thing you want to kind of think about here is if they do go lower, let's say they go lower and they end up coming down to that range here, can I buy down here? I definitely can, but I'm going to have to use one of these setups, right? See how this thing went up and then really dumped back down? And then see how the bears, they tried once, they tried twice, and then they pushed it? That's exactly what you're going to want right here. Because, yeah, we're overall bullish, but at the same time, though, that momentum coming down is going to be extremely strong. It is, right? And the way that you adjust to that kind of really strong momentum as it rolls over, right, is you look for that one try for the bears, two try for the bears. Their stops are right above that high. The magnet is right. The range is the magnet. The stops are fuel. And as you can imagine, you can definitely trade the same thing, right? Buy off the low, find that new channel, trade that first test, right? We talk a lot about that. Going to trade in the rotation here as we go. Remember, though, as we go lower, if it starts making those lower lows here, yeah, that's your cue right there. That means you're not looking for that. Remember, these are higher lows, right? Not lower lows. That's one of the easiest ways to tell which one you're looking for, right? If we run lower here and then, higher low, yeah, you know they're trying to make a run back up into that trading range. But if it dumps across and starts to roll lower, yeah, find that channel. Don't worry about being down here. If it really starts to bleed going lower, remember, anytime we see that much strength going lower, right, that short is a money short off the high. And again, we talked about a couple breakouts here. Remember, that breakout leg will be the measuring leg, right? We don't know what it's going to look like just yet, but that's what we're looking for. I gave you 2 out of the 4 breakout patterns here on this chart. Let's keep going, right? Let's keep going here over to the NASDAQ, because the NASDAQ is similar. You know, the S&P and the NASDAQ are usually pretty similar, but this one I think is, you can see it right away, right? It's quite different, right? First of all, the biggest difference is the size of this move. You know, anytime we see a really big move in one day, the following day is oftentimes range bound. You know, it makes sense, right? You go run a marathon on Thursday, you're probably taking the day off on Friday. You know what I'm saying? So it makes sense that the market has to kind of, catch its breath a little bit, right? So now, again, tomorrow's a Friday. It's a non-farm Friday, so there is no rule that says we have to be a, sleepy range tomorrow. But just be aware. I'm always thinking whenever we see a big move one day, I wouldn't be surprised if we see a kind of a range, for tomorrow. Remember, we are traders. We don't predict. We wake up early, right? We stay away from we stay away from the news, and we trade whatever the market gives us, right? That's all we can do. Okay, we can't predict. Anybody who does it it's a waste of time. So we're expecting that range, and it looks like we got that range developing right here. Now, that could be the range tomorrow. I hate to break it to you. It could be really anything, right? It may jump up at the news tomorrow, right? News might come out. We may jump up into a new range, all right? So we're gonna talk about that on this video here as we go deeper. That's one kind of, first thing I notice. Second thing is you can see right away they get that really strong rip higher. And this is what I think might be one of the biggest clues on this chart, which is you'll notice, remember, anytime we see a real strong move in one direction, what do we expect? We expect to get a pullback, trap in those bears, right, a la failure pattern, and retest the high. This does not look very convincing, does it? It doesn't. Yeah, we're definitely very bullish, but it just, look where we are. We're right there. I mean, it's okay, I'll give them that. They're closing above that high. I'll give them that, but this is definitely not that convincing right now. So in all reality, this could be tomorrow strong move up, they retest the high, and we just kick back and relax a little bit, right, as we go into Friday's trading session. That would make a lot of sense right there, right? So kind of keep that, that's kind of the second thing I think about when I see this. Third thing that I think about here is it's just basically a spike in channel. Strong move up, pull back, higher high in price, draw that trend line, mark up that low. It's a spike in channel. Now, why do I mention that? Who cares? Well, spike in channels are notorious for pulling back right into the base of that channel. All right. It's a lot of it has to do with the fact that spike in channels, they push the market so far, so fast that nobody wants to buy way up here. And so what will happen is, much like on the S&P, right, you'll see buyers take their profit and the market will collapse. Oftentimes, when it comes to spike in channels, it feels like this thing is in a free fall. And it feels like, oh my goodness, I should be selling this. And you can sell this on the way down. But what I'm telling you right now is don't be surprised if we make this big push down. I'll talk about some shorts going lower here in a second. And then miraculously, the buyers come back in and run it right back up into that trading range. That seems to be quite likely for tomorrow if these buyers can't, either hold it sideways or push it higher here. Those are kind of the three things that are kind of on my radar here right now, right? So we're anticipating that, again, possible range tomorrow. And again, we'll see what we get here as soon as the opening bell rings. So as we go higher, as we go lower, how do we trade it? How do we buy it? How do we sell it? Really it all comes into the range. The range is, anytime you see a range on the chart, the range is the magnet. The range is kind of it's the foundation of everything that we do. Now, as the market goes higher, I'll tell you, I'll bet there are a lot of sellers who would love to get that retest. I don't think this is a strong enough move to really be one of those. It's definitely not as, strong as that one. You know what I mean? This one kind of stair steps way higher here. It's not like the S&P, right, where the S&P had that just, right, that straight line up. Something like that is just begging to be retested. This one here, it's bullish, but it's definitely not as attractive as that as this one, right, or the one on the S&P. So, bottom line is range below us. If we do retest that high here now, right? If we do retest that high here now, how's my location? Great for a short. How's my momentum? Not that great, right? So what do? We use those 2-try failures. I think we do want to respect this trend line as being an area of support here. So as we go higher, same thing as we mentioned on the S&P. I got to let those buyers try once because of the momentum, and I want to see ideally a trap, right? Or, sometimes we'll get something like this where it'll go up. Right, you'll see like one try right there, draw that trend line. It's really, really high, right? That short like that. It's almost a trap. What you want to do is, again, you want to respect the momentum of these bulls, make them try twice, right? Really rope them in. All their stops now are sitting right below that low, right? You're going to use those stop losses to fuel this move going lower, right? When you're getting short, the buyers are already in. When their stops get hit, they have nowhere to hide. They have to sell their way out of that position or risk taking a much bigger loss. Most traders are not going to let this thing go against them too far, not with that range below it. It's an easy stop run and a run back down again. So think about it that way, right? Either we get, the ideal would be 1, 2, and a trap to avoid that trend line, right? Or again, maybe you get this nice, trend line up here, and we can get it, nice and, you want to sell as high as you can. Let's put it that way. You want to sell as high as you can off a level of resistance, whether it be a trend line up there or be a trap like I'm describing here right now. And then again, don't forget, much like on the S&P, right? You can grab that pendulum, and before you get to that pendulum, you go out, you find your new channel. Again, I mentioned earlier that I want that, I like those trap entries. Find that new channel, right? Find that. And again, you might not get that prior swing to line up, right? But again, as you rotate off that high, it's that failure setup, right? Into, again, and maybe it's a trap right there. I don't know what's going to be. What I do know though is I want that short, the first test off the high of that channel. And of course, my target is that pendulum. right? I had a great question from one of you guys this afternoon, and that is, at what point do we know we can keep on selling it? Once it breaks through that pendulum, right? Once it breaks through. So, like I said earlier, we know we might get a very deep pullback here, but think about it, right? This thing could easily pop up, buyers once, buyers twice, take off the downside, start to grind lower, and there's that, right, classic, kind of grind, move lower. There's that trap, there's that failure, right? And you're basically looking for that short, right? Trap, failure, pullback, whichever entry we get off the high of that channel as it goes down to take out the low of that spike in channel. Right, some really good short setups there, right, off of that high, and then let's see here. As we go higher here, right, we'll talk about the buy side, and we'll talk about how to buy it down here, right, off of this spike in channel, because it's obviously going to be, right, pretty bearish once we get there. We talked about two breakouts, right, higher. We talked about the breakout pullback, right, using that prior high. We talked about the two-try breakout, right, with that strong move, that shallow pullback, that trap, okay? We talked about how the breakout leg is the measuring leg, right? So remember, that's going to tell you where this market wants to go next, okay? That's pretty straightforward. Okay, two more breakout patterns, right? Two more breakout patterns. One will be a 1, 2, 3 breakout. 1, 2, 3 breakouts are really simple. You want at the very minimum take out that high. Okay, it could go through it. It could just double top it, whatever it is. And then you want to see them pull back and hold that pullback. Okay, now if that happens, get rid of that big channel. Right, so again, they take out the high. The buyers say, no, we're not done. We're holding that pullback. Right? Didn't do it here, didn't do it there, so we'll see if they can do it this time. Again, tomorrow's a big news day. We don't know what we're going to get. Could easily break out and run higher. This market's made it very clear to us it has no problem, right, pushing higher here. Even after a taper announcement from the Fed yesterday afternoon, 1, 2, 3. Now remember, guys, the strength of this first leg has nothing to do with this breakout pattern. The strength of the leg coming off the moving average is the giveaway. Okay, that's the giveaway. If we get that 1, 2, 3, now we're good. If all we get is that 1, 2, okay, no, that's not it. Okay, that right there is a recipe for a 1, 2, and see ya back down into that trading range. But if they get that pullback and they jump off the moving average, remember, anytime we see a strong move in one direction, stick with that direction. Find that new channel. I'm going to drill down to a faster time frame. Keep in mind, this is a 4,000 tick chart, right? We are not trading a 4,000 tick chart in our trade in the Nasdaq, right? Drill down to your faster time frame. Find your trap entry. Find your failure entry. Find your pullback combination off the moving average. Again, I'm not going to go into details about the entry setups, but I do cover the vast majority of the details in that quick start trading class. So make sure you grab that little link up there. I put it up there earlier, right? So grab that link. I have a lot of examples of these 1, 2, 3 breakouts into first channel test inside that quick start class. I probably have over 100 examples of how we apply these setups to markets like the Nasdaq or the gold or the oil, right? All of these we cover here on this video. So that is the third, right, of the 4. And then we've talked briefly about the fourth one. It's the grind breakout. These are pretty common. Right? We break out. Okay, we don't exactly hold and jump. Right? It breaks out and it grinds, right? In my trade room, I call these runaway markets, right? When it breaks out and kind of grinds, it kind of hovers above that, right? Above that moving average. When I see stuff like that, and again, I've already talked about these to the downside, I mark up that trend line off those highs, I find that low, and my favorite entry is to find those traps, right? Now, the trap, again, is usually just one of them, right? So trap, get below that moving average, right? Get below that moving average, grab that failure, grab that pullback, right? And from there, okay, that grind breakout. Okay, we talk about the breakout pullback, the 2-try breakout, the 1, 2, 3 breakout, and the kind of that grind breakout, right? Almost like a spike in channel, right? That grind breakout going higher. And again, remember, right, the size of that breakout leg. If this happens, guys, it'll be that leg right there. it'll probably be symmetrical there and trends like the number 3. So think about the same size of that leg, up there. Okay, remember, symmetry is really, really, really effective in trending markets. Not so much in range markets, but trending markets, symmetry, ABCDs are pretty darn effective. All right, guys, that's pretty easy stuff there as we go higher there. How do we buy it as we come down, right? If we do end up coming down here, right, we talked about how to sell it. If the market was to run lower right now, make a nice strong run lower, you're going to have a trend line coming down like this. And that trend line is your absolute best friend, okay? As we go lower, you can probably imagine there'll be some shorts off traps off that trend line. That will be what you're looking for in the overnight, right? Or in the pre-market tomorrow morning, if things are moving quickly, if they're moving well. Again, we got big news tomorrow. Keep it in the radar. Now, that trend line coming down, as you can imagine, now creates a pretty big problem for these buyers. What you want to think about now is we want to use this trend line as our friend. We want to get 1 try for the bears, 2 try for the bears, and what I'll usually do in these situations is if we do get that move all the way down there, I'll usually, again, look for that short on the way down, get that retest, and then 1, 2, and then try to use that trend line, right? Use that trend line as that level of support. 1, we got to get above that trend line. 2, we have a lot of momentum going lower, so use the 2 try rule to lock in those bears. I cover all the details of the 2 try rule in that quick start class. You'll learn more about what I mean right in that. 1 try, 2 try, rope in those bears. I've got all those stops are sitting right above that high. The best entry is off the trend line, right? And then of course sometimes we don't get it. Sometimes what will happen is you'll get something like this where it'll roll over and run. At that point now, mark up that new high, mark up that low, grab that first test as we trade that rotation, right, back up to retest those highs. That'll be something we'll have to look more at right once we get there tomorrow morning, all right? But that's going to be the biggest challenge as we come down will be that trend line. Okay, that's why I say as we go lower here, your best friend, that trend line's your best friend, right? Find those traps and take this thing out down to those lows there. Yeah, pretty good stuff there on the NASDAQ. And if we go sideways here, remember, if we go sideways and we sit and go sideways, what do? Keep using that range as a magnet, keep buying low, keep selling high, and we'll do more tomorrow once we know some more information. NASDAQ, lots of potential, both the long side and the short side here on the E-minis. Let's wrap things up tonight now on the oil, the black gold, right? The Texas tea. What's going on here on the oil? Now, first thing about the oil is you can see a pretty big move today. So anytime we see a big move in one day, we anticipate, again, there's no hard rule on this, but oftentimes when you're running an ultra marathon, this market going up and then all the way down, the next day is oftentimes pretty quiet, right? Not pretty quiet, but range bound, right? It can move, but just sideways, trading rotation. So be aware of that for tomorrow. Next thing is you can see a very strong leg. Now, when it comes to trending markets like this, we take the first leg. The first leg is symmetrical leg. As you can see, that first leg, they blow right through that area, right? We call these open loop moves. Very strong move in one direction. There is a bullseye back to retest that low, okay? The bears, at the very least, the bears want to get back to retest the low. If this thing continues to kind of accelerate going lower tomorrow, we've got pretty much 75. We're 79.5 right now. That's a little bit out of its comfort zone for a move for tomorrow. That would be almost a $5 move, for tomorrow. So it's not likely. But, as you saw today, they made pretty much a $5 move today, right? 83 down to 78. It is a lot to ask for this market to go $5 2 days in a row, but it won't be the first or last time that's happened, especially with what's going on right now in the world we're in. So definitely, that I would imagine the bears keep going lower. They've got their eyes on 75. 75 is a juicy round number, so that will be an easy magnet as we go. Speaking of magnets, don't forget if the buyers can take control, which could easily happen. And look what else happened today. If the buyers take control of this, Okay, that range above us, 82, that should come at no surprise. We've had that range on our radar for quite some time. We got a lot of momentum right now, right? A lot of momentum on this chart. Again, I got this kind of sell zone right overhead here. I am anticipating at some point a range tomorrow. There are kind of three, basic scenarios I want to make sure we're kind of ready for here on the oil. One would definitely be a range down here. Again, if we do end up going sideways, the game plan is going to be to find areas of resistance above the range. Wait for that pop up. I'm not a big fan of picking tops and bottoms. I'll look for a buyer failure to sell off that high. You'll see a lot of examples of these in that quick start trading class, that free class on the website I mentioned earlier. So make sure you grab that link in the upper right-hand corner. So if we do end up going sideways, remember, right, these can also oftentimes be those slingshot breakouts, right? I don't want to repeat myself too much tonight, right? But, that failure into that first pullback, right? Get that pendulum swing, right? And we talked about all this before. Same thing we talked about in the Nasdaq and the S&P can apply right there as well. This is just bearish, right? Rather than being a bull market into a trading range. So that can be applied, right? Remember, if it keeps on grinding, goes lower, right? Find that new channel. We talked about that earlier in this video. So keep your eyes on that range. If the market was to keep going lower, right? If we were to keep going lower tomorrow, I would look at this just like that kind of grind channel, right? Just like that grind channel that keeps rolling lower on us, right? Find those traps, get those traps, get those buyer failures, right? Hit them and basically just keep on short of the top of that channel. So if it keeps on rolling lower, don't worry about, well, am I too low? Remember, if you have enough momentum, right, it's almost a guarantee that first pullback gets sold. So if it keeps rolling lower here, wait for the pop, find that channel drawn off those lows. Again, 75 is probably the objective at that point, and we'll know more once we see what happens here. The big question right now is, how do we get the pullback, right? How's the pullback look? There are three types of pullbacks. Okay, there are three types of pullbacks. There are shallow pullbacks, there are modest pullbacks, and there are deep pullbacks. Now, shallow pullback. We definitely may see a shallow pullback because we have so much strength going lower. The three types of pullbacks I'm always looking for whenever I have a very strong move like this, because I'm anticipating a retest of that low, is one would be a shallow pullback trap. Remember, the idea here is we have lots of momentum, but it's not a very good location. The ideal location right now to short this thing is up around that 80 area, right? Prior lows, that's the ideal spot. Okay, if all we get, and again, if it's very strong, right? So if all we get is this little shallow pullback, again, momentum is very good, but location isn't very desirable. So that's why traps are great, right, for this situation. Remember, two questions, right? How is my location and how is my momentum? Yeah, momentum's fantastic, all that bearishness, but location's not that great. So because location's challenging, because I don't want to sell too low right now because it's such a big move down already, I want that trap, right? So shallow pullback, trap. Or we may see it go above the moving average. Again, I'm not a big fan of picking tops in these pullbacks. Wait for those buyers to come in, try to push it higher. And once those buyers come in and try to get long, all their pain, all their stops, all their exits are right below that low. This is a very easy failure into pullback combination. Make sure you get that pullback pattern before you jump down to that low, right? Failure pattern, pullback combo before we get back to retest that low, obviously, on the pullback setup. All right? So again, not trying to pick the top. I'll wait for these buyers to get roped in, right? Wait for those buyers to buy it back up. It's so bearish. Just wait for that big juicy red candle, sell right into stops, hit it again on the pullback, take some profit off at the low, and definitely leave a runner. Yeah, definitely leave a runner. Again, leave that runner, 75, good round number. This could also be used as a measuring leg as well for a target down there as well. Now, deep pullback. The deep pullback is really what you would love to get. Deep pullbacks are great because you get great risk-reward ratio. The problem with the deep pullback, though, is momentum, right? So if we get a deep pullback, how do we trade this now? Okay, so here's the key to a deep pullback. How strong is the move going into it? If it's really strong, I can get pretty aggressive with the 1, 2, stops are right here, and I can sell right back into it. Remember, as it pulls back off this low, as it bounces hard, okay, anytime we see a strong move in one direction, you know the buyers, they're going to be all over this. They're going to want to go back into that range. So give them the benefit of the doubt. Don't try to buy the market just yet, right? But anticipate they're going to try to buy this thing. Let them try once. Let them try twice. I can get pretty aggressive on this trade, okay? On this deep pullback, 1 try, 2 try. Okay, stops below the low. That again is it's simply a 2-try failure. It's a failure setup that because it's a deep pullback, we respect it with 2 tries. Simple as that, right? Wait for that nice big candle, sell it into stops. Easy trade. Easy trade. What you don't want to do is, if it does like this, right? 1, 2. Okay? That's the one you want to avoid. Obviously, because we're right into that low. You see the difference there? There's a big difference between selling here and selling here, right? It's risk-reward ratio. I have a lot of reward down here in this one, not very much in this one. So what do you do if it get a jackknifes like that, right? What do you do if it goes up and then comes 1, 2 like that? You wait for a trap, right? Trap there, you wait for a trap. Okay, remember traps are great whenever you're trying to sell relatively low. All right, so you wait for that trap. Sometimes you don't get the. Sometimes you just don't get the good entry. You know, it's just what it is. You know, nothing's ever guaranteed. Nothing's ever perfect in these markets. We take whatever the market gives us. Now, at what point does this pullback turn into a reversal? It's got to hold it. Right? They got to get above the moving average. The buyers have to hold it. If they can hold it and jump, what do we call that? 1, 2, 3 reversal, right? Mark up that high, mark up that low, drill down to your faster time frame. We're not going to 4,000 tick chart on this, right? Drill down and find one of the entry setups. We talk about the failures, the traps, the pullback combinations off that low. All right? If the market really punches and runs, strong move up, shallow pullback, higher high in price, traps. All right. If it really rips higher, right? Really rips higher, separates and keeps going from the moving average, we get that shallow pullback, that higher high confirms the move. Because remember, this could really bounce and then 1, 2 back down again, right? Lower high is the giveaway. If it pops up and goes higher high now, that tells you now that trap, right? Or it pops up and grinds higher, right? We've talked about this too many times already, right? Grinds higher, find that channel, you got it. Trap low, failure, and back up into that trading range, right? You guys are experts now on these price action setups. Now, of course, I've covered a lot in this video. You know, learning this stuff is kind of the easy and fun part. The hard part is going out and applying it correctly day in and day out without making mental mistakes, without forcing trades. And that's exactly why our trade room is such a great shortcut. You know, like I mentioned last night in our psychology video, you know, having a mentor is fantastic, but you got to go out there and trade with him or her every day. That way you can kind of model your actions. As we said last night in the video, right? It's like learning to swim. If you're going to jump in the deep end, you better do it with someone you trust to kind of keep you out of trouble. I'm going to do more than keep you guys out of trouble tomorrow morning. We'll find the best setups. We'll avoid all the stuff that's likely to fail on us. And we're going to finish up what has been a very good week tomorrow morning at 8 o'clock Eastern Time in our trade room. I'll put all the membership information in the description of the YouTube video. I'll put a big button for you guys on the website right below me tonight. Don't be afraid to call the office if you have any questions. I'm always here to help out along the way. And again, if you like this video, as always, please make sure you subscribe to our channel. There's more good stuff coming next week. And I hope by now you hit the like button here if you enjoyed this stuff here on this YouTube video. All right, guys, that's it for me tonight. As always, thank you so much for tuning in. Feel free to type questions in. Definitely share this information with a friend. And I'll see you tomorrow, right? 8 o'clock Eastern Time in our trade room. If I don't see you tomorrow morning, come back and see us next week. Don't forget about the time change this coming weekend, right? Don't forget that time change this weekend as we go into that kind of Veterans Day holiday next week. All right, guys, that is it for me. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.